The crypto market continues to face pressure, but behind the corrections, we're seeing some of the most important developments yet for XRP, XDC, and the broader ISO 20022 ecosystem. XRP is currently trading around $2.79, down almost 2%, with Bitcoin at $108,000 and Ethereum at $43.50. Corrections are hitting nearly every major altcoin, from XLM to Hedera, but this has less to do with fundamentals and more with uncertainty. Investors are waiting for September, when the Federal Reserve may finally deliver a rate cut. Until that decision is made, fear and hesitation will continue to trigger short-term volatility. At the same time, Bitcoin dominance is beginning to slide. This matters because a decline in dominance means capital is rotating out of Bitcoin and into altcoins. Historically, this shift has been one of the clearest signals of the start of alt season, when capital inflows propel projects like XRP, XDC, and others to new highs. Many altcoins have not yet broken their historical highs, which suggests that the largest phase of this bull cycle may still be ahead of us. On the political and regulatory side, there is turbulence in the United States. A federal appeals court recently ruled global tariffs under Trump to be illegal, but Trump immediately declared that tariffs remain in effect regardless of the ruling. This kind of policy uncertainty adds to the overall volatility in global markets and inevitably influences crypto. Whenever there is economic uncertainty, liquidity tends to shift quickly, and digital assets feel the impact immediately. Despite these challenges, XRP continues to see major adoption signals. Canary Capital, one of the firms applying for a US XRP ETF, made a striking statement this week. Its CEO said that after Bitcoin, XRP is the most recognized cryptocurrency on Wall Street, even more than Ethereum. From a purely financial perspective, he argued that XRP could surpass Ethereum in market capitalization in the coming years because XRP is designed to solve a global multi-trillion-dollar payments problem. Ethereum has its strength in decentralized applications, but XRP is laser-focused on financial infrastructure, stablecoins, tokenization, and derivatives. As that utility is activated, its value will inevitably increase. Institutional moves confirm this outlook. A massive whale purchase was just recorded on the Korean exchange Upbit. 16 million XRP, valued at $45.5 million, were bought and moved to an external wallet. This signals institutional accumulation at a time when retail traders are being shaken out. When large amounts of XRP move off exchanges, it reduces circulating supply, tightening the market and preparing for potential upward momentum. And while XRP prepares for utility expansion, XDC just announced a game-changing partnership. Circle's Dollar Coin, the world's largest regulated stablecoin, is integrating directly with the XDC blockchain. This integration will allow seamless cross-chain transfers, bringing stable liquidity into XDC's ecosystem while using the XDC token as a bridge. Circle benefits from XDC's enterprise-focused blockchain, and XDC gains the legitimacy and liquidity of Circle's stablecoin. Ripple already has Ripple Dollar, so it does not need Circle, but XDC lacked a native stablecoin until now. This makes the partnership mutually beneficial and positions XDC to play a larger role in institutional blockchain payments. Circle does not operate its own ledger, which is why leveraging the XDC network provides a direct advantage. With Dollar Coin on XDC, enterprises can settle stablecoin transactions while the XDC token acts as a gas and bridge asset. This is a major step for XDC, which is also part of the ISO 20022 family, giving it credibility in regulated finance. For investors, this means XDC may soon transition from being a niche altcoin to an integral part of real-world settlement networks. Taken together, these developments point to the same conclusion. Utility is driving the future of crypto. XRP is being recognized in financial institutions as the bridge for payments. ETFs are waiting on approval. Whales are accumulating tens of millions of dollars. And now XDC is integrating one of the largest stablecoins in the world. Even as short-term corrections dominate headlines, the foundation for long-term adoption is getting stronger every week. The market may seem uncertain right now, with September rate cuts still undecided and political noise coming from the United States. But behind-the-scenes adoption is accelerating. Stablecoins, tokenization, and institutional demand are all converging around projects like XRP and XDC. As more ETFs are approved and as integrations like Circles with XDC roll out, the case for an alt season led by ISO 20022 tokens becomes harder to ignore. For long-term holders, the message is clear. Short-term volatility is noise, but institutional adoption is real. With whales buying XRP, with Circle expanding into XDC, and with Ripple Dollar pushing forward globally, the stage is being set for a financial transformation where these assets will no longer be speculative, but essential. The alt season is coming, and tokens like XRP and XDC are at the center of it.